everyone. Welcome to the Trading Battle sponsored by ACAP. Today, we have two very special guests from Token Metrics. If you trade crypto and you haven't seen their products, you need to because there's a lot of valuable resources included in their memberships. In one corner, we have Bill Noble, Senior Market Analyst for Token Metrics. Bill, self-dubbed an old fart, who started in the markets as an 18-year-old intern during Gulf War I. He worked for the big banks on the future exchanges, really great pedigree, left what he called the legacy world in 2017, 2018, went crypto full-time, worked with big names like Charlie Shrem and now Ian Ballina, who's, into altcoins. And when he grows up, he says he wants to be Crypto Kramer. In the other corner is Forrest Przybysz, and the Director of Research for Token Metrics. He started his career trading Facebook ads, which I find is fascinating. He says that, trading Facebook ads is similar to trading crypto, and that's what, kind of wet his feet, and that's what got him interested in the markets. He started mining and trading crypto in 2016, 2017, and went full-time crypto this year, and he's got a lot to share with us because he's in the markets staring at screens 8 to 12 hours a day. I personally love it when we pit two analysts from the same firm against each other because there's a lot of history and hopefully some friendly competition. But before I begin, I've got to ask, who's the boss? Forex has the sexier title of Director of Research, but you've only been with Token Metrics since 2021. Bill, you're the old fart that's been there since 2019, which is a decade in crypto time. So, who's the boss there?
Wouldn't really say there's a boss. The org structure at Token Metrics is fairly flat. We all have a lot of autonomy. While we're in the same department of research, Bill's able to really focus on market research 24/7 and pushing and creating that content and communicating that content out to our YouTube channel and our TMTV, our Token Metrics TV subscribers as well. So I'd say there's really not a boss here.
Would you agree, Bill?
I think we work well together. Honestly, Forrest has got the Director of Research title because he's in charge of a group that really has to hunt for the small coins. They got to rank them and they got to write reports, right? So, I focus on market movements, the connection between, say, crypto and other markets, talk about it. Forrest is in charge of a really smart group of people whose job it is to say, okay, yeah, this crypto project that just released could 10x or 100x, right? So that is honestly, that's a game for, that's a young man's game. So nobody's better at that than Forrest and his crew.
I think Annie in the chat put it best. Ian is the boss. Neither of us are.
Right. Yes, that is true. Ian Ballina is the boss. Yes.
That is true. But I like that young man's game, what you said about young man's game as well. Okay, now it's time to get down and dirty. Both gentlemen are trading for charity. So there's a lot of stakes. St. Jude's. They'll put on live trades. We'll see who comes up on top at the end of today's session, but the ultimate winner will be declared next week, and that's when we'll decide, who's the better trader here. So we've got three challenges today. The first is going to be Bitcoin versus Ethereum, whether they want to buy, sell, why. The second challenge is the best altcoin trade, and the last is the best swing trade going into the weekend. So let's get started. Bill, Biddy or ETH? What instrument are you trading? Do you want to buy or sell? Where are your stops? And give us the reason why.
All right. So let's, can I bring up my PowerPoint? Would that be okay?
Yeah, I think it was up just for a second. Our producers will put it up. Go ahead.
Okay. All right. Here it comes. Okay. So let's talk about what's going to happen tomorrow. Bottom line is I'm going to start being short Bitcoin, and I'm going to tell you why. So tomorrow in the U.S., if you're on American time, at 8:30 a.m., they're going to release the inflation statistics, right? CPI. And this number could be so bad that the government actually preempted it with a tweet today from the president saying the inflation number tomorrow is going to be bad, but it doesn't reflect energy prices. So don't freak out. I'm like, okay. Yeah. Okay. Don't freak out about inflation. All right. Yeah. Okay. Sure. All right. So, the markets, they try. And of course, that's why crypto was down. Okay. today, as you know, the crypto market is very smart. They're like, oh my God, I'm not carrying a long position into this number if I don't have to. So if you look at Bitcoin that I've got right here, Bitcoin on a 45-minute chart, it went down, but as you watch it correct, it's not starting a new trend. It's going up, down, up. Elliott wave guys call that like an ABC correction. So Bitcoin is actually looking like it's got a shot at going lower. Now, other cryptocurrencies look better. So we've entered this new world where, cryptos could decouple from each other, which is why, I could be probably positive Bitcoin, or I'm sorry, negative Bitcoin and positive other layer one solutions. Now you ask for levels. Okay. 48K seems to be something that, the market is broken below. So if we got to trade this for the next hour, even though this is not exactly my game, I would say if this thing is below 48K, it's probably going to go lower between now and the number. Because I mean, who's going to say, oh, wow, let's get levered long into this crazy number. We'll probably get long some things tonight, but the answer to your question is, the first trade is short Bitcoin. So I'll do that while we chit chat. Okay.
Well, you've got to share with us also where stops and targets should be, because Biddy is a rich coin to trade. What would be a good, and obviously very volatile. So what are we looking at in terms of where to put your stop, where to put your targets?
Okay, well, I think I just got the trade in. Producer can tell me if I got that in or not for half Bitcoin. Honestly, I think the stop on Bitcoin is probably like that 48K level, right? Now, I have a different time horizon. I know you guys have all kinds of different traders. I'm an analyst, I'm a thinker. So with Bitcoin, I'm like, all right, the liquidation point's probably 48 or 49K. I know we got a lot of guys that trade on leverage. I don't think that way. I think the ultimate target for Bitcoin between now and say the end of December is probably like 40K. There's going to be a flash wick to 40K. And my insane prediction is that, believe it or not, there could be a problem in Bitcoin because Elon Musk, he sold 10 billion in Tesla stock. Watch out around the holidays for Elon Musk to gather some attention via Twitter and say, I'm unloading my Bitcoin. Now, that said, I think there's going to be a big opportunity to buy layer ones like ETH somewhere in here. So I'll send that back over to you, hoping that that's a good answer to your question.
Well, I do have a question back, which is that 48,000 from 47,600 is nothing. I mean, that's 0.5%. I mean, you're obviously going for a huge target, which is wonderful, and our viewers, would love to see that. But is it too tight, or are you not worried at all into such a big number?
Well, all right. So good question. So for tonight, if it prints 48,200, most likely the trade's not going to work out if we're working out for, if we're thinking for a 1 hour time horizon. Big picture, I would say Bitcoin has to climb above 50 for it to say, all right, yeah, it's back to neutral. So, I'm drawn on charts. I probably have to stop out of this at 50, especially if I'm thinking there could be a flash wick lower sometime between the end of the month. Now, again, the reason that you be short Bitcoin is to protect yourself so you can be long other layer ones, right? You can get long this stuff that's got, I think, an intermediate to long-term future. And we'll get into that later, I would expect.
So, that is really a little piece of gem that Bill dropped to us, which is that the spread trades are really the valuable trades. It's not just about, go straight, buy, sell one instrument. You have to think about the bigger picture, and the best opportunities could be, long ETH, for example, against Biddy or something else. And that could be the better opportunity. But enough from me. Forrest, what are you looking at in terms of the first trade to kick us off? Do you like buying or selling Biddy or ETH?
Yeah, so this is a dicey time to be buying or selling with a big news announcement tomorrow. However, I'm going to be going long on ETH in large part because it's just above this amazing support at $4,000. If you guys can see my screen here, that is what I call the 3x long margin pressure level. which simply means this is the level at which buying pressure enters the market on 3x long leverage, because leverage traders are then able to buy, right, at $4,000 Ethereum on 3x leverage while maintaining a liquidation point below this key support of 2652, which was a swing low in this move up, right, towards its all-time high. So I expect buying pressure to come in and enter the market as soon as Ethereum hits $4,000. Now, because we're in a contrived circumstance, and I don't want to bore anybody, I want to get some points on the scoreboard. I don't want to bore anybody with just waiting for a trade to fill. Normally, I would swing trade this. I would buy it. I'd put a limit order in at $4,000. And if we get some bad news tomorrow, I'm pretty sure that'll fill. And then I would put another limit order down here at $3,400, which is another big margin pressure level off of our swing low, or our $1,700 low. What does that mean? That means as soon as Ethereum's price drops below $3,400, you can go long on 2x leverage and have a nice relaxed liquidation point below $1,700. So I expect a lot of support there. I'm long rather than short. I know it's a dicey in the short term, but I'm long rather than short, just because if we look at total cryptocurrency market cap here, right? I'm going to zoom out to the weekly, and I've got some notes here. We can get rid of all of that very, very easily. This is total cryptocurrency market cap over the last 8 years. It just goes up and up and up to the right. Yes, there's corrections along the way, but I'm not about to get short crypto in a bull market. And if you look at ETH, when crypto and Bitcoin got absolutely smacked last week, ETH held up. It wicked down, it held up, and it's holding this long-term trend line. So I want to get long on ETH while it's on this amazingly long-term trend line. I think Bill going short Bitcoin is actually if you made me trade Bitcoin right now, I'd actually be going short just like Bill. But because you gave me the option for ETH, I'm actually going long ETH, because ETH showed resilience in a down market this past week. So I just placed a trade for, I believe, 5 ETH, right? We're on 20x leverage. I'm actually not going to put a stop loss in. Normally I would, but since we're in this circumstance, right, where we're kind of forced to use 20x leverage, I'd like a 5%. 20x leverage just means that if the market moves against your trade 5%, you're going to get liquidated, right? I'll just use my liquidation point in this particular trade as my stop loss. And just normally I would size down my trade if I was using 20x leverage. I may also throw in a limit order down at 3,500, just in case we do see that bad news wick us down tomorrow like it did earlier this week.
So let's talk a little bit more about your general technique, which is, it sounds like you have a probative. You would normally have a probative entry point around a key level like 4,000. Then you would scale in at a lower level. I think you had 3,400. But if you were to do that, where would your ultimate stop be on a trade like that?
Yeah, so ETH, because I'm a long-term hodler in ETH, and normally I trade on 3x. ETH is probably the one cryptocurrency out there that I would maybe not even consider putting a stop in and let myself get liquidated and just downsize my trade. Now, that being said, I want on 3x leverage, I probably want to stop below $3,400. I want to fill at $3,400. And if we continue to drop out of this expanding range, guys, by the way, when you start seeing expanding volatility like this, that's usually very bullish. That means it's a very confused market, and you'll usually break out to continue the trend, right? So the market is very confused. But to answer your question, I would put a stop loss probably right. See this support down here below 3,400. We held support over here on 3,400 multiple times. And it was previous resistance as well. So I'd want to stop loss at the next local low, which would actually be 3,268. So I would average in at $4,000 again at 3,400. If it dropped down to 3,268, I'd get stopped out. The reason I like to ladder into trades like this is because if you're early on the first ladder, but you're right on the second bounce, you actually get the bounce back up to your original entry point, which allows you to be break even on your first trade, and that's a scratch, and profitable on your second trade. So you're net profitable, right? So that's a strategy that I consistently use. Even if you're wrong the first time, if you're right the second time, you still profit.
So does that mean that in that scenario, you would exit the entire position at the original entry point?
I would use probably a trailing stop loss. I would probably exit my first trade sizing at the original entry point, so that I'm therefore free rolling the second trade, and then I'd use a trailing stop loss for the rest. Right, so I'd take partial profits to make sure that I've gotten all of my my initial entry back, and then I would use a trailing stop loss. So if we got resistance here at $4,000 and started going down, I would just get stopped out in profit.
So, both of you talked about the importance of tomorrow's US inflation number, and it's certainly one that everyone focuses a lot on. And, we know that big releases tend to have a very significant impact on equities, treasuries, currencies, and crypto. But, what are the releases that everyone should focus on? I mean, traditionally, for a very long time, CPI did not matter. This one matters more because we're at the cusp of a possible acceleration in taper. But how much does global macro and U.S. data impact some of these big names? Bill, do you want to go ahead?
Sure. So yeah, CPI, or any of these manufacturing surveys that have like prices paid, like these ISM surveys. So these inflation calamity headlines, they've been out for a while. So the real big question going into tomorrow is everybody over kind of like inflation disaster scenarios? Like, do we all know about this already? Is it priced in? I mean, look at the short squeeze that happened this week in equities, right? I mean, that was unbelievable. All the hedge funds were the same way. So to answer the question, I think there's like three numbers, right? Unemployment claims were out today, right? Initial claims for unemployment. As of today, I believe, there are more want ads out there than there are unemployed people in the United States. That is an unbelievable number, 18 months plus into a pandemic, right? So those figures, and I also think, I know it's not global macro, but, whatever the virus news of the day is, that can really move the market. It moved it last time. I don't think it moves crypto that much. I think crypto kind of ignores the noise, and crypto maybe lives in fear of, say, the Fed coming in and interest rates going up. So for me, the macro indicator that I look at for crypto is actually the 2-year note yield. So if rates go up, but not too much, Goldilocks, that's awesome for crypto. Crypto gets wrecked when rates go up sharply. That's my opinion.
Forrest, with such a big number ahead, what would you typically advise, our viewers, your viewers? Should you, reduce your positions? Should you square up? Should you not care?
Yeah, so obviously we're not giving financial advice here, but it really depends on your personal strategy. I can talk about my strategy a little bit because of this chart that I shared earlier of just crypto has just been on this ridiculous, I'll call it a bender for the last 8 years of just going straight up, seeing this exponential growth. I have a long-term portfolio that I hodl, right? I just hold it, right? And I average in when we're in a bear market. And I'll consider taking some profits, trimming some positions here and there when we get overextended. Now, with my trading portfolio, I just really, really focus on getting into good swing trades with really good entry points. I'll talk about this trade I did on Luna earlier over the last couple of weeks that I'm actually still in, right? I got in on this key margin pressure level, which I described earlier. I got an entry at $39. And despite the big crypto crash, this trade is still up, right? This trade is still up. So I haven't had to worry about paring down my portfolio. I took 50% profits, and I've got a stop loss in down here at break even. And I'm just free rolling this trade in case Luna continues to go up, right? And I'm because of because I'm making sure I get really, really good entry points and I time these bounces, I don't necessarily have to worry nearly as much about incoming news tomorrow, right? Because I'm in this Luna trade that is already up. I'll give you the percentage number, 66% on 3x leverage. That's like 170, 180% up. I don't have to worry about a news shock coming in and stopping me out or liquidating me tomorrow. So my trading strategy, because I'm a swing trader, is really, really focused on lasering in and sniping these really, really solid entry points so that I don't have to be too worried about that news. Now, given that news, I am absolutely hunting for some bargains, right? If this news comes in tomorrow and crashes the market, I'm going to be lasered in, focused on trying to find this bottom, right? Catch the falling knife. People always say, don't try to catch a falling knife. Well, if you get good enough at catching a falling knife, it'll stop cutting you and you'll actually catch it.
And if I am observing correctly, being good means being aware of the key support and resistance levels. I mean, it's clear from this chart here that, basically Forrest is buying at swing lows or selling at swing highs. More buying because there's really no, swing highs here, but just focusing on former congestion points. And, it's something I think, our viewers can learn to do themselves as well by following you and also, watching the charts. So Forrest, you are the altcoin expert at Token Metrics. So our second challenge is to basically, share your favorite pick that's, beyond the big names that we typically hear, and, why you like it, and, the levels that you're looking to buy, sell at, as well as your stops and targets.
Yeah. So, all right. Now, that the way you phrased that question is really wanting me to shy away from Dogecoin, because this is the altcoin trade, and I'm still going to put a trade into Dogecoin, but I'm probably going to go with maybe FTX. I think FTX is in a pretty good spot. I'd like to put it actually in my real portfolio. I have an order in on FTX down here at about $33. I'm going to explain that. But because of the way this challenge is set up, our P&L actually is matched by 8cap, right? And we have the opportunity to make a lot of money. So I'm very, very tempted to put a trade in down here on Dogecoin on this key support level, right? Because this is just asking to bounce back up to 32 cents. And nothing would make me happier than to put this trade in, go long on Dogecoin, and just see the bounce up and make a ton of money on behalf of charity. So I'm actually going to do two trades here. The first one is FTX. Normally, I wouldn't mess around with Dogecoin nearly as much because it's just, yeah, it's fundamentally less sound and there's more risk involved than trading FTX. So FTX is an exchange token for FTX Exchange, which is run by SBF, Sam Bankman-Fried. Yep.
We have Doge, but we don't have FTX on the platform.
Oh, okay.
So you can do the Doge trade if you want.
Yeah, let's talk Doge, right? Let's talk Doge then, right? Normally, because I let my trades swing a little bit, I like to be in really strong fundamental projects that don't have risk in terms of like huge downswings, like this 78% discount we're seeing Doge at right now. But because we're talking some shorter term timeframes, some 5-day timeframes, I want to go long on Doge. Believe it or not, right? We're at the bottom of this key support level. Actually, if we calculate the margin pressure levels here, and I'm just going to explain those one more time. We had our local swing high at 34 cents. Where is the point of diminished returns, or where does the incentive to short Dogecoin run out? The incentives runs out at 17 cents, which is currently where we're trading. We're trading at 17.1 cents. And you can see that previously, we've had some highs and lows that match up with 32 cents and 16 cents. We got the perfect bounce here, or we got an initial bounce at 16 cents. I think we could start to see some support at 17 cents. Yes, could be worrisome news tomorrow, right? Maybe I would set a stop loss down here below this wick, but I'm going to go in a long position here on Dogecoin. And I'm actually going to take a large sizing, much larger than I would normally take in a portfolio. Now, keep in mind, we've got $10,000 on 20x leverage. I really want to take a big chance here to try to raise a lot of money for charity. And if this destroys my P&L and the effort, I'm okay with that. But I would just love to see Dogecoin pump on 20x leverage here and make a ton of money for charity. So I'm going to go Dogecoin long because there's really no incentive for anybody to come in and short it here unless we breach this level, in which case, I'll get stopped out.
Okay, great. I have a question about that chart. So, it's great to see that huge drop that we had over the weekend and then consolidation right above those key levels that you were talking about, reinforcing the importance of the level that you're talking about. But let's imagine we did not have that drop Saturday and we're just falling. Would that affect your view? And you had yet to see that consolidation. Would that affect your confidence and conviction in buying at that level?
Yes, if we didn't have this wick down here, I would be way more comfortable with my long trade, far more comfortable. Because we breached this level, a lot of times when you see these really, really nasty wicks, what you'll notice is that you get the dead cat bounce, and then you start to trickle down slowly and bleed down to that level to test it again. This is something that you can actually see here on the Dogecoin chart multiple times where it crashes, right? It bounces back and then it just starts to bleed again. It starts to bleed again. So I'll show you if I can pull it up on the Bitcoin chart that, when we crashed here back in May and we spilled off and liquidated on Bitcoin, or we had so many liquidations on Bitcoin, right? We bounced back up the next day, but then we just started our slow descent back down to this level. And we ultimately had to test this level again. Now, the good news for me is, you can certainly consolidate up here and continue higher before going down. And if we only have 5 days here, I think there's a good chance that even if Dogecoin does start bleeding, right, eventually down to this level, I may have some positive price action just based off of 17 cents being pretty strong support over here over the next 5 days. So I'm going to go ahead and put that trade in. And this is
really valuable. That's really valuable information. I think not everyone would look at it that way, but seems those past examples really reinforces the point. Bill, what are you looking at to put on for the altcoin trade?
Okay, I've already got it on, so I'm going back to PowerPoint here. Oh no, actually, I think I'm on TradingView. So I'm going with Solana, and here's why. Solana at 180 seems to be a really clearly defined support point. If I'm looking at, this is an 89-minute chart. Let's go back to 45 minutes, right? Solana has been down here at 180 3 or 4 times, right? So they have had every opportunity to break this. And I'm asking myself, I'm looking at this, I'm going, all right, this number tomorrow is scary, but if it's all priced in, what layer ones like Ethereum are close to support? So if we're in like a trading game environment, like what's right there near support for risk reward? Okay. And I think it's Solana. Now, with Solana, a lot of big institutions, like I saw Kraken came out with like a $600 target. Okay. I'd settle for 280 myself. Okay. That's a level that I'm looking at. Solana, I don't know if you saw a near protocol today, like the whole market was red and near was up. Okay. That's another one that I like. Phantom. Okay. All of these different layer ones, okay, these smart contract platforms. So now I'm going to try to get to PowerPoint here. Okay. All these different layer one platforms, okay, like Avalanche. Okay. Now, when you look at Avalanche, right, on the left, you saw Avalanche rise from 76 to 96. And how did it do that? Well, it looked just like a trend, right? It was like an Elliott wave. 1, 2, 3, 4, 5, up to 96. And then over the last 2 days, we've been watching this really grinding, annoying correction. Okay. Where did the correction take us? Well, right to the 62% retracement of the up move near $84. So, and of course, naturally, as is always in crypto with big technical points, there has to be a stop fishing exercise below 84. So, a couple hours before we came on the air. They went fishing for stops at 84. They get they get the crypto on the stops, and then the market takes it higher. So this to me looks like if the number is a non-event, as much as I would want to be short Bitcoin, I would equally want to be long the Solana's near 180, the AVAX is near 84. Okay, this is the Solana chart. Now, Phantom, which is something I may put in soon. Okay, this is another layer one. Okay, now where did I get this from? Speaking of token metrics, from Forrest Crew. Okay, Michael, if you're out there, if you're seeing this, giving some love to you guys. The guys like Forrest and our other analysts, they're using these layer one platforms for everything from DeFi to gaming. So, yeah, okay, Phantom got crushed today. But Forrest will tell you on our shows, you want good projects at good entry points. So Phantom is sitting right on top of its 62% retracement at $1.42. Now, to be honest with you, as an analyst, I thought Phantom was a decent buy at 2. So as the ancient saying goes, if I loved it at 2, if I liked it at 2, I got to love it at $1.42, right? So Phantom is another one of these ideas where if tomorrow is kind of a non-event, man, these layer ones, this is where all the value in crypto is headed, right? If you've noticed like ETH-based DeFi gets smacked over the last couple of days, that's because all the value on ETH from, say, DeFi and gaming is being pulled into Ethereum, right? So, I mean, if you think about that and then you look at Forrest's analysis of like the Ethereum charts and you say to yourself, okay, what's the next big trade? Not just for tomorrow or for the next 3 days, but, at Token Metrics, we're trying to help you make money in crypto over a longer period of time. Now, something that our guys actually flagged really early was Near Protocol. Okay, now, Near was a pain in the butt. Our guys identified it, and we watch it trade at $8 or $9. And I think the smart money really knew about Near. So we watched it. And then, of course, as is the case in crypto, as is the case in foreign exchange, right? I started in foreign exchange. The favorite sport in currencies, crypto or otherwise, is stop fishing, right? Stop fishing. So what did they do in Near? Great currency at 8 or 9. They fished for stops below 740. Okay, took it all the way down to 6-ish on a wick. Then when it comes back up, okay, there were no sellers, right? Smart money had grabbed it all. And Near, if you're watching this today, was actually up as the rest of the market was down. So these layer one protocols, right, for altcoins, they're the next big trade. Now, just one final note. Where did I get that idea? Okay, from looking at tokenmetrics.com and from listening to the research that Forrest Group does, right? The guys that work for Forrest, they know where the value in crypto is going to be. Now, where I come into play is coming up with, say, tactical levels and telling you a story. So hopefully you're still awake out there. But that was the story and the narrative behind layer ones and why, from a trading point of view, the Solanas, Nears, and AVAXs, along with ETH that Forrest did, is really the place to be, okay? Not investment advice.
So, I think you're beginning to answer one, I think, of the most important questions that new crypto traders have, which is that there are thousands of coins out there, and everyone wants to know how to find the diamond in the rough, how to select the trades, how to keep track of them. Sounds like Token Metrics has a really good platform to identify some of those trades. And Forrest, I guess, does some videos explaining the reasoning behind why those trades are good. So can you talk a little bit about the thinking behind that? Like, Forrest, how are you identifying these coins amongst all of these other ones?
Yeah, so we kind of take it in 2 steps. We actually kind of have 3 prongs at Token Metrics. We've got the market research, which is where Bill's keeping track of market trends, the different markets, the legacy market. How's this going to affect crypto? How's this going to affect the tokens that we're rating very highly? Speaking of rating tokens very highly, that's where our dashboard comes in. Our dashboard is optimized across a number of different metrics using AI and machine learning and quantitative insights to actually rank. Here, I'll show you the dashboard right now, to actually assign grades to all of the across 6,000 plus cryptocurrencies. I think it's like 8 or 9,000 now that we have access to, right? So then Bill and I are able to laser in on, and focus on these cryptocurrencies that have very, very high potential or a very, very high grade in our quantitative AI machine learning driven models, right? Two examples right here that I've personally traded profitably over the past week were Polygon and Terra Luna. These are higher cap tokens with a lot of fantastic liquidity, traded on leverage that have been very profitable. And look, they're in the top 20 or so cryptocurrencies as measured by our grading system. Then we have our investment research arm, which we're looking for the next 10x, 25x, 50x, 100x opportunities in cryptocurrencies, because in the crypto space, because it's so rapidly expanding, there's a ton of new projects coming in. A lot of those projects, to be quite frank, either suck or they're scams or they're just not going to go anywhere, right? It's actually pretty difficult to make to start a crypto project and see it be successful. It takes a lot of effort. We've created a manual review process where we're actually able to look at those projects and rate them across 10, 15 different metrics and grade them for their potential and how good of a project we are. So it's very similar to doing like VC investment based research, but then we're wrapping that all up into newsletters, into videos for our customers, and shipping that research out to them and making that professional grade research actually available to them in this crypto space, where normally you'd have to be part of a VC fund or an investment bank to actually get that level or that high quality of research.
So, Bill, if I have I know you offer a lot of model portfolios. If I have a portfolio where I'm heavy in Bitcoin, ETH, or I just have exposure to Bitcoin, ETH, how would you, how would you advise? I wouldn't say recommend, someone to allocate some of, their positioning on some of these new names versus some of the big names. What is the way they should think about this?
Okay, great question. All right, so at Token Metrics, one of the coolest things that we do is we take the AI and we rank cryptos, and then we have financial engineering guys, like portfolio management experts, use our technology to build portfolios. So what you're looking at here is the daily index, okay, the daily portfolio rather, for all the coins on Kraken. So our AI goes through all the coins on Kraken, ranks them, and then our portfolio math puts it all into a what looks like a portfolio. Again, not investment advice. So we have daily ones, weekly, and monthly. So if you want to set up a portfolio like you would for long term, or if you want to just look at the daily indices and say, where does our AI want to park money? So let's answer the question. So if you've got Bitcoin and ETH, in my opinion, all right, you have to be more weighted towards ETH for, say, the next month. Why? Well, in Bitcoin, remember, I know it's crypto, but a lot of legacy players own Bitcoin, right? Kathy Woods at ARK Investments, right? MicroStrategy. There's a lot of people that never even heard of Bitcoin, say 1 or 2 years ago, or wouldn't even think about it. They're now invested. And they're not going home for the holidays, okay, worrying about what's going to happen with their Bitcoin. So there could be hedging pressure. So I would think you would want to be, I don't know, say at least 60 to 65% ETH or layer ones versus BTC. Now here, we're going one step further, okay, looking at the coins on Kraken and saying, all right, where does our AI want to park money? Where does it want to put money in the short term? Well, Matic at 25%, right? So our AI is saying, hey, Matic's been stable and looking to go higher, okay? Decentraland and Sandbox. So we haven't talked much Metaverse. I was pounding the table on Metaverse for a while on our YouTube channel, okay? Our AI likes layer ones, layer twos, and Metaverse. And I think, if you take those 4 sectors, I mean, that's almost like in equities, you'd have like industrials, technology, financials, okay, and, you know, let's say basic materials, right? Those are some of the sectors. And crypto, believe it or not, if I told you anything that you could take and run with for a year after tonight, it's that crypto, folks, is now a sector game, right? It's not all up at once and all down at once. It is, but there are going to be sector plays, right? We saw metaverse up, market down for a little bit. That's something that's going to be coming up. So when you do your portfolio allocation, you know, think ETH, think layer ones, think metaverse.
Okay, I could ask you a million more questions, but you know, we have to go to the next challenge. But before we do so, let's bring up the scoreboard and see where our traders are at, because at the end of the day, this is a trading battle. So taking a look at this, you know, Forrest has ETH on, Doge on, because he's so heavy in Doge. That's obviously the one that's weighing on his portfolio the most. But at the same time, Bitcoin moves a lot, and so the losses on a dollar basis about the same for Bill. It looks like because Forrest has fewer positions on, he's got, you know, a slightly smaller loss than Bill. But as I said, you know, anything can change when it comes to the trading battle. So, you know, we revisit next week, that could change as well. But we have one more trade to put on before we really kind of settle the books. And that's the trade that probably is the one that, you know, our traders feel the most confident about, because this is the one where it's not about, you know, what you want to do based upon altcoin or, you know, Biddy or ETH. It's your favorite pick for the weekend or the week ahead. And, you know, let's give Forrest a chance to go ahead with this one first.
Yeah, absolutely. So honestly, the slam dunk trade, I think, is actually the trade that I've already put on, and I put and I've actually opened like 4 or 5 trades, or put in 4 or 5 orders that I'll walk through really quick. I think the slam dunk trade is to snag ETH at $3,400 or $4,000. I think this is the trade that I'm most confident in, right? You buy it at $4,000. If it dropped, for the sake of the show, I bought it spot here at 41.20, whatever. Buy it at $4,000, let it drop to 3,400 if it wants to. Pick it up at 3,400, let it bounce back up to 4,000, and you're profitable. Or if it bounces at 4,000, you're already profitable on the first trade. Now, I entered a couple of limit orders, one being that $3,400 ETH trade, the other being one in Shiba Inu, Matic, Sandbox, and Near Protocol. So I'm going to walk through Near first. Near Protocol has very strong support down here at $6.30, and it's been running very hot. Now, there's a very strong potential that we get some resistance at the 3x long level, which is 945. That's the level at which the long pressure, the buying pressure that's been buying this up for the last 2 days on leverage, actually runs out. So we run out of some buying pressure. Now, of course, we could make support here and go to 1260, right? But because we're putting a limit order in, we don't really have any risk if it just continues to run. We just don't get filled on our trade. So what I'd like to see is actually us defeat this downtrend line, which we have, and come back down and either make a bump and run, which is just when you make support on top of your previous trend line, or come back down here and double bottom, right? Double bottom on this $6.30 level. So I've actually put a trade in, I believe, at $6.40 just to increase the chance that I get filled. But we saw this level double bottom before. I want to try put a limit order in here to let this come down over the next couple of days and get filled at a really, really cheap price. Now, the next trade that I'm talking about is going to be Sandbox, right? So let me find Sandbox here. Sandbox wicked down to this really important $4.25 2x short level. And remember how I talked about on Dogecoin, oftentimes you'll see this wick down, and then you'll see it bleed down to this level. That's what I'm looking for on Sandbox. This is a very, very important level because it's where the incentive, much like with Dogecoin, it's where the incentive to short Sandbox on leverage dissipates, right? Because we made our all-time high at $8.50. As soon as price drops below 425, you can no longer short it on 2x leverage and hide your liquidation point up here. So I've got a limit order on Sandbox down there at $4.25. I'd probably keep my stop loss around 353 if I was using a lower leverage amount. Because we're using 20x, I'd want to keep my stop loss probably around the low of this wick down here, which seems to be at about $4.10. So that's where I'd keep my stop. Entry would be about $4.31. Next up, we've got two more really quick. Matic, right? I'm setting in a limit order on Matic, which I'm currently actually in my real portfolio, a very, very comfortable Matic trade. And you can see I've already mapped out a ton of stuff here. It's pretty messy. I actually got into Matic off of this $1.51 margin pressure level. I let it swing down to $1.51. I compounded my position at $1.55 and have been letting this run. And you can see, again, just like Luna, despite this crypto crash that's come down, I haven't been threatened to even get liquidated at break even. Now, I let this trade run because crypto's volatile, right? Could have used a trailing stop loss, but my take profit target here is $2.90. Now, because we're looking out over the next 4 to 5 days, I want an entry point at this key $2.02 level. So I've got an order in, I believe, at $2.03. This is a key level that was actually resistance in the past based off of this $1.01. And I apologize for this messy chart. This $1.01 low. This is the point at which the buying pressure can start coming in again on 2x leverage, right? Based on wanting to keep your liquidation point on isolated leverage down here below $1.01, right? So I expect if we come down further, a nice bounce at this $2.02 level, which with a take profit target all the way up here at $2.90. Why $2.90? Because that was the 2x level, right, of our $1.45 swing low. Right. So you take your swing low of $1.45 to exit, and that's where you start to get the bottom of your range for $2.90. Right. And we saw this previous margin pressure level of $1.51 based off of our swing low here. Right. And that gives us the top of the range of $3.02. Right. So that's my take profit target. Last trade, won't take too much more time here, and I'll give Bill the floor. Shiba Inu. Right. And I might actually have to type in Shiba Inu here. Right, I want to catch this support on Shiba Inu in case we get some bad news tomorrow and the lower quality crypto coins start to fall out. Right? Why is this really big resistance or support rather? Why do I expect a bounce here? Right, at around 20.040 and then like 2,700, because that's the 2x short level, same concept of our local high here at 5,400. That's the point at which in the short term, the incentive to short runs out. So there's a lot of incentive. There's a lot of incentive to short up until this level. That gets crossed out at 2,700. And we also have nice previous support at 2,700. So I've got an order in there, and I'm happy to put that order in because I would absolutely love if we saw a meteoric bounce off of this level in the next 5 days, and we're able to donate a ton of money to charity. Now, we only have 5 days, so we can all keep our fingers crossed for a little flash crash and then a pump out of Shiba Inu on behalf of St. Jude. Now, those are my trades for the week. Those are my swing trades. I know I didn't enter any on the spot here, but I really think we can get some better entry points in the next day or so. I'll hand it over to Bill for his entries.
So, Bill, are you going to spread us wide like Forrest, or go narrow with one or two focused ideas?
I'm gonna give it to you with one idea, bringing up the PowerPoint here, just coming up. All right, so let's talk about DeFi. Let's talk about something that everyone is asking me about on my streams. DeFi 1.0, the governance tokens of the original DeFi player. So this is like your chain links, Uniswap, Compound, Aave. All right. Now, this is the DeFi perp futures contract. And I believe I was actually able to enter a trade in a DeFi index and short it. And here's why. Okay. DeFi 2.0 is happening on Olympus and Avalanche. So I'm not going to go into that, but the real trade that's the sleeper is that DeFi 1.0 that a lot of people own on Coinbase, right? They think they're blue chip stocks. They're not stocks, folks. They're just governance tokens. And one thing we've learned at Token Metrics this year is that you better understand the tokenomics of what you own. So if you've got a governance token, even if it's a famous name, okay, that token either doesn't do anything or there's no reason for it to appreciate value with the yield farming story coming and going. So what am I really trying to say? I'm trying to say that, DeFi 1.0 is in trouble. And if the market goes down, some of this stuff could just, in my mind, totally disappear and has started to disappear, right? This DeFi perp index that I got up here went from 13,000 to 10. I went on my show, says, okay, it's at 10, right? But it better start doing something. You better start seeing buyers come in or this is going to get crushed. And guess what? Not only did buyers not come in, but it got hammered today. And even tonight, I noticed it looks like they're selling every uptick. So a week from now, short Bitcoin, right? That's the Elon Musk trade. Long Solana, that's my layer one play. And short DeFi 1.0, right? Short this stuff because if the market goes down, even if the market goes up, I don't think these coins are going to participate, right? It's going to be layer one and metaverse. So I'm lasering in on DeFi because for charity, right? If the market blows up, right, it's going to be this stuff that gets crushed. So it speaks to this idea of sector rotation and it speaks to the idea of tokenomics, right? Are you making educated decisions and do the tokens that you're invested in, okay, is there a reason for them to go up or are the tokens structured to have value long-term? DeFi 1.0 was revolutionary, but I think it's in serious trouble. So I'm long layer ones, I'm short Bitcoin, and my altcoin play is to be short DeFi 1.0. Again, going back to that theme of I'm betting heavy that layer ones are going to capture value from both Bitcoin and old school DeFi.
So you're selling here. Are there any levels to watch in terms of stops and targets?
Okay, good question. So I'm kind of aping into the DeFi short. I'm looking at the DeFi 45-minute chart. So let me bring that up so I can give you some granularity on, the DeFi for the short-term traders. So here is the 45-minute chart of the DeFi perp index that I was looking at, right? Now I'm going to use this arrow here, okay? That's showing basically 10K, right? 10K on this index. So I gave this index, I've been watching this for a couple days. This index had 3 opportunities to get to 10K. Get through 10K and stay there. And it failed. Just failed. So I guess the stop would probably have to be above the recent swing high. So 10,900. Okay. What's the price target? I don't know. If the market doesn't do well, it could go down to 8,400, right? Because if you go to a daily chart, let me see if I can pull that off, right? If you go to a daily chart, look what happened to DeFi back in June, right? I mean, like, it seemed to hit like, almost 7,000 and actually spent time below 7,000, right? So if I'm long layer ones and I want to hold them, what can I put on that's going to get destroyed? That's this DeFi index. So, risk is a move to 11,000. That's where you get out. Okay. Reward is potentially 8 or 7K.
Good stuff. We have a lot of people cheering both of you on and hoping that we make a lot of money for our charity. This was truly one of the best trading battles I've hosted. So thank you so much, gentlemen. Producers, let's bring the scoreboard in to see if there's been any changes. I know that we've got a couple extra trades. DeFi is doing well for Bill and helping him to turn a bit of profits. But as I said earlier, we'll see how everything shapes up on Tuesday. Now, we've got a few minutes left on today's stream. Bill, Forrest, I'm going to give you the opportunity to talk about how our viewers can get in touch with you and get more information about Token Metrics.
Okay, so on YouTube, it's youtube.com/tokenmetrics. So we're on YouTube every day with fresh content. Forrest and I do a live stream together. We each have our respective shows. Now, if you want the good stuff, folks, we're talking the AI, the private groups where you can be interacting with other customers and us in like a VIP group, right? And of course, there's the research that Forrest Group produces. That is tokenmetrics.com. Okay. If you need a roadmap for crypto and you need to make money in crypto, and I saw some people in the comments are like, hey, man, I need 100x. I need to make money. Well, where are you going to get that from analysts? The answer to that question is tokenmetrics.com. youtube.com/tokenmetrics for the video. And I believe it's at Token Metrics Inc. on Twitter.
Great stuff. So it was truly a pleasure to have both of you on, Forrest, Bill. Thank you to our viewers for watching the Crypto Battle, proudly sponsored by ACAP. I look forward to seeing you at the next one.
Thanks. I appreciate it.